Good morning and welcome to the Market Forecast. Happy Friday, everybody. It's Friday, July the 30th. I'm John Hoagland. Thanks for trusting me with your time. If you're in the markets already, I know we had some pretty decent overnight markets last night. Hopefully, you were able to take advantage of those, but we've got a whole day left of this week with which to look for opportunities. And as always, we'll be looking for accurate context, good risk management, and the ability to remain patient. Eco numbers this morning at 7:30. The personal income and outlays came out a little bit higher than expected. PCE price index a little bit lower than expected. 8:45 this morning Central Time. Chicago PMI is due out, and at 9 o'clock the Michigan consumer sentiment numbers due out. As far as other information is, U.S. stock rally sours a little bit yesterday as fears of COVID uncertainties persist. The S&Ps trade to a new all-time high and then fall sharply. The NASDAQ continues lower after Amazon reports on lower sales growth, perhaps a sign of their lockdown boon coming to an end. As far as earnings this morning, only really important earnings are going to be out this morning because it is Friday. Heavy in the oil companies this morning, ExxonMobil and Chevron, both beating expectations as far as earnings and revenue. Caterpillar also beating, AbbVie also beating expectations for earnings and revenue. Crude prices head for perhaps the second straight weekly gain. We'll have to see how that plays out, of course. And as always, make sure you like the lucky like button. Make sure you hit the lucky like button. That was hard to say this morning. Also, remember to share, comment, question, feedback, and heckling. They're always welcome. Make sure you subscribe to our YouTube channel. Taking a brief look at the VIX, the dollar index, and the 10-year yield this morning. VIX showing a little bit of fear in the marketplace, up about 7% at 1896 last I checked. Dollar index up slightly from yesterday's close, but off its recent highs and currently pretty close to its monthly low, 91.92, and the 10-year yield holding steady at 1.25%. As always, I got to say good morning to everybody. Fred, I'm ready for you if you still are looking for the how to put the delta on the profile charts in the T4 platform. Good morning, Theo, first in the room. You win the prize. Brian, Bill Phillips, good morning. Jorg Ednelson, good morning, everyone. What a beautiful night last night. Oh, good. Yeah. He loves futures today. Excellent. Good to hear. Caesar, Jim Wolf, George Adams. Jerry is awake, and hopefully John is too. Ravenwise, Zorain. Fred Decker, question, do you think the other time frame buyer was active in crude oil yesterday? I thought I saw a wave of buying like long time frame buyers raising their bids all day. Still can't check Delta. I got you, Fred. We'll check that out here shortly. Laura, good morning. Brett, good morning. Had a profitable morning in the London session. Before heading to work, traded my live account instead of the trading combine, though. Happy trading, everyone. Good to know that you had a good morning. Brett, Ryan Williams, Greg H., Jason, Joseph, the future scalper, good morning. Prophet Eon, JB, have a great weekend, everyone. I like the lucky hit button. There you go. Good. You know, it's early. I haven't really spoken that much today so far, so sometimes I get a little tongue-tied, huh? Dustin, good morning. Question, there's a huge block of imbalance below 4,300 on the ES. In your experience, how long do such large amounts of unfilled orders remain relevant? Quarterly, annually? Well, it's hard to say. Like anything in futures, there's nothing that's finite. You know, they're going to be unfilled until they're unfilled, and they'll be relevant. Fred, oh yes, all right, good. Great day in the morning to you. Great day in the morning. Good morning, Nelson, Vince. Trading Research, good to see everyone. I'm not quite sure how to answer that question, Dustin, to be honest with you. You know, there's imbalances all the time, daily imbalances sometimes that can move the market. So it's a good question. Sorry, I'm not going to be able to help with that right now. Uh, so well, let's jump into the charts. And again, my apologies, Dustin. Let's jump into the charts and see what we're seeing this morning. As always, we start with the daily in crude. Fred, as we get near the end of looking through the charts, I'll show you where the delta is on the T4 platform. Let's take a look. As always, the daily in crude is where we start, basically just going left to right for no particular reason or order. Okay, so Fred, your question yesterday, we had a pretty decent up move. Okay, we got 8 days of upward momentum. What do we do as far as open interest is concerned yesterday? We lost 2,800 in open interest. So the question of is new buying coming in is somewhat answered in that regard. Some of the longs or some of the buyers that came into the market yesterday were short covering because we see that the open interest has dropped a little bit. Now, look at the volume down here. Volume was pretty weak. Usually, when there's a kind of a breakout situation or even continuation, we look for a higher volume, and we didn't see higher volume yesterday. I'm kind of it's right in my notes here, Fred. This 4-day balance area, we could consider this a breakout or continuation off the overall short time frame rally we've got going here, but it didn't impress me again because of the low volume and again because of the loss in open interest. So I'm thinking that our weekly kickoff level, 74.10, is really where I think we're going to see our long time frame begin to focus on this market again. These weekly kickoff levels that we put out every Sunday aren't meant to envelop the weekly opportunity or where I think the range is going to be at any particular time. These are specific levels that I calculate where I believe longer time frame traders will really begin to focus on the market. Now, we haven't seen an opportunity near a weekly kickoff level in crude oil this week. We've got today. We're only maybe 60 ticks away from it. We're going to see how the market plays out this morning. But as far as longer time frame entry into the market yesterday, I think it's a lower probability of being true because of that open interest drop. Now, we've got an inside extended trading hour range here. Are we looking for a possible test of this weekly kickoff high? I think it would be a pretty good visual for us to try and reach up to. Now, the 30-minute, no overnight inventory. Settlement is up here, 73.62. If it's not on your charts, I suggest putting it on. And the market kind of opening, bordering value from yesterday. I'm not seeing any real important or urgent reason to try and get into this market. I'm going to let the market kind of establish its early range, and I'll work the extremes of that range for my opportunities. Yesterday's rally, I'm considering, and this is right in my notes, Fred, as old business, short covering, not new buyers. They can still come into the marketplace at any time, but the kind of breakout above that range that we'd been in, I believe, chased out more shorts than it did chased in new longs. When we take shorts out of the marketplace, what does that do to the market, Fred? It takes some buying power away from the market. So keeping that in mind, be patient today. Let's take a look at here. Fred, as long as we're on crude oil, I've got the crude oil profile up here. Now, this is a different platform, ladies and gentlemen. This one isn't necessarily that available because we can't administer the market profile. So I'm going here, Fred. I'm going to go up here to properties. I'm going to go to profile. I'm going to go to display. I'm going to go to summaries. Okay, we are here at summaries. I'm going to scroll down. Okay, there's delta here that's checked. That's already on. Delta here that's checked. That's already on. And here that's already on, and there. So there it is. So if you don't have those checked in summaries, once you have them checked, whichever one is the right one. So we have this one, we have this one. Just check all the delta, and then you'll have your delta on there, and it's right here, Fred. Right here. So properties, summaries, check all the delta, and then you'll have it. All right. All right. So now let's take a look into the S&Ps. I don't predict. All I do is look for levels where I believe there might be fish. I think we're still continuing in short time frame control here in the S&Ps. 6 days of balance, old business. What concerns me and what came into light yesterday was the upside momentum is beginning to drop off in the day time frame. We have our whole moving averages. This is the 9 session, this is the 13 session, and they're both headed lower, and we've had a crossover of them. Okay, so this is a kind of a momentum indicator for me. These two moving averages. That's the Hull HULL moving averages, 9 session and 13 session. And when we start to see them change direction, in other words, they've been moving higher, they're looking lower. We've got the crossover. This is an indication of potential reduction of upside momentum and perhaps a move in the opposite direction. And I don't predict. We did see a pretty decent increase in open interest yesterday, 8,700. Volume wasn't great, but usually volume isn't great on the upside in the S&Ps anyway. So this open interest boost is going to be kind of hard to read because of the way the market traded yesterday. Is it new longs on the way up, or is it new shorts on the way down, or both? We see the market kind of heading to the downside here a little bit this morning. Take a look at the 30-minute chart. So here's what I'm talking about as far as the difficulty in understanding what increased in open interest yesterday. Was it new longs on the way up, or was it new shorts on the way down? New shorts on the way down. If we do see sellers coming into this market at this level, that's going to be new business. Old business, which maybe was what we were doing on the way up yesterday, as this market tends to eat shorts over and over again. But this market turned and headed south. To me, it looks more like the momentum or the increase in open interest was created more by new shorts than new longs. So now we've got settlement up here, 14.1175. Put that on your charts. We've got a gap open. In other words, we were opening well below yesterday's range, so gap rules are going to be in play. I think that there's some pivotal support lower. We've got this week's low right here, and then we've got a naked point of control down below also. So that visual is, can be a target. If traders are focused on this point of control down here, they're going to tend to make the market go. We also have a new naked point of control from yesterday above. but I'm really going to be trying to focus on if we are we going to see an inventory adjustment. Does that inventory adjustment close the gap? If the inventory adjustment doesn't close the gap, I'll look for opportunities to sell strength, and there may be opportunities down in this area to maybe find some fish down there as well. All right, it's Friday. The one thing I don't want to do is I don't want to get myself in a situation where I start getting caught up. I don't want to end the week on a bad note. Lacey is singing to everybody this morning. She's saying good morning. She's such a princess. All right. Look at the volume yesterday, and the Nasdaq was pretty weak. We didn't put in a new all-time high. We didn't trade to a new all-time high yesterday. The Nasdaq has been presenting slightly weaker, I think, than the S&Ps. We added 1,400 in open interest on a down day. All right, so thanks for pointing that out, Fred. We're going to go back and look at that here very shortly. Again, the upside momentum seems to be falling off. Our hulls are pointing lower, and they've crossed over. Where is this? Where does this kind of prove to be true? To me, it proves to be true at weekly kickoff low 14,766. We took a look down there earlier this week. We were rejected. We take another look down there today. There's likely to be some fish down there if we even get that opportunity to see it at that level. So let's take a look at the 30-minute chart. All right, so again, opening with a gap. Here's our stab down to weekly kickoff low that happened on Tuesday. We're still largely in range here. We don't have any naked point of controls to really look at except for yesterday's. Down below, though, there are a few that have been just lingering out there. That's a big break for that to happen, and I don't see that happening today. So deep overnight shorts, if we get the opportunity for a adjustment in inventory that can't close the gap, then I think we might find some fish there. Certainly be looking for fish down at weekly kickoff low. Again, that level 14,766. That would be my ideal opportunity for today. Two of them, actually. An overnight adjustment that can't close the gap, or an opportunity to see price down at weekly kickoff low. Still largely, I think, short time frame controlled. Gold. Okay, I was excited yesterday. I thought maybe we had something really going on because we had this big up move. We did add 18,000 in open interest, but overall, the volume was not yet impressive. So this is indicating this is new business, okay? We were in a range. We've driven out of the range and added open interest. This is new buyers coming into this market. With VIX a little bit higher, with equities a little bit on their heels, it makes sense. Continuation may depend on the fear factor in equities. We'll see what the equities do. If there's any continuation to the downside, I will look for a test of 1840, the weekly kickoff high. Take a look at the 30-minute chart. So 7:30, something spooked the gold. We still have a huge gap left from yesterday and the day before. The market really not presenting any good opportunity. 1835.80 was settlement. I guess I didn't get that on there. 1835.80 is settlement. That's close enough for rock and roll. No real overnight inventory, just a lot of consolidation, which tends to balance out inventories anyway. The last week's high here is the kind of a kind of a potential support level because the market kind of broke out of that range last week's high, a visual level. Obviously, the market has traded to it, giving us a little opportunity to perhaps find out some fish here, but the market really just kind of establishing a range, and I'm going to focus on the extremes of that range for my opportunities today. Back to the euro. Back to the euro. Again, yesterday at another breakout potential on lower volume. We lost open interest, so we're not seeing what we would be thinking we're seeing. This move to the upside was more likely created by old business, by shorts covering, than new longs. Doesn't mean that new longs can't come in. The market may come back in, retest this weekly kickoff high, and then move higher. The open interest that I found this morning was not what I was expected. I had to double check it 2 times because I was pretty sure we were going to see some some open interest increase on this move to the upside. Instead, it was the opposite. We've seen the dollar drop a little bit. It's down near its 1 month low. So I still believe there's some potential for continuation to the upside in this potential breakout situation, but just not impressed by the numbers, the volume, or the open interest doesn't mean it can't still happen. The 30-minute chart, no real overnight inventory. Looks like a little bit of a volatile overnight session. We've got tons of points of control with which to focus on. Largely, where are we? We're still in yesterday's range, basically for the regular trading hour session that we're in right now. The lack of volume and open interest on this up move yesterday and really just consolidating up here yesterday makes me a little bit nervous. Okay, so basically we're testing value from yesterday with no gap, nothing else to look for. Try and stay patient in this market and into the 10-year. Eight days in balance. Isn't that a Beatles song? No, that was 8 days a week. Focus on the extremes here, ladies and gentlemen. There's a little open interest help. We added 4,700 yesterday, but on a market this thick, that's really kind of a hiccup. It's almost kind of moot. Volume yesterday, a little lower. There's nothing really in volume and open interest that are going to really help us. It's basically watching the extremes of this area of balance. We did open with a gap of 1 tick, but that has subsequently been closed. Here's the 30-minute chart. We do have some overnight longs in this market. What those overnight longs are looking for are new business buyers to come in and push this market higher. If they can't, at some point the overnight inventory may push price back down towards settlement. There is a visual to a point of control up above. If buyers come in, this would be an interesting level to possibly try and find some fish. Go back and take a look here at what Fred was talking about with the late spike on crude oil. Here's what he's talking about: is this push to the upside right before the close, and then the close, the settlement closing at the high here. The market hasn't had the opportunity to accept higher pricing because we ran out of time. We ran out of regular trading hour session. So the market opening in that late spike does indicate a potential higher probability for higher pricing. The market attempting to do so right now. Best case scenario after a late spike is a gap higher. That's the strongest upside indicator. Opening in range, but in the late spike, opening in the late spike is the second biggest opportunity to the upside, and opening below the late spike is not usually a good sign. So thanks for pointing that out, Fred. All right. So the couple of questions here. The short covering idea is fascinating. I know every rally starts with short covering, but I didn't see the evidence of short covering. CL closed on its highs. Didn't consider open interest in volume. Yeah, always be thinking about that. You know, Fred, you are a market profile guy. You're an auction theory kind of guy. So, you know, when an auction is healthy, it tends to bring volume and open interest as the uh, as the auction to the upside begins to fall off, we start to lose a little open interest and a little volume. That's usually the warning sign that a change is potentially on the way. Good afternoon, everyone from Lagos, Nigeria. Ophelia, good to see you. I want to know what platform I can find and trade all these you teach us every day. Sorry, new here. You go on the website, you can get a trial with the TS Trader platform. That's the one that you're currently looking at with my charts. There are TPO charts. If you're new to this, I want to let you know that every Wednesday I have a group coaching session. I will be putting the link in here so that you can sign up for it now. All of your questions, I can answer you there. Don't have necessarily time to do it here. We've got about 1 minute before the equity open. Spike rules are in play. Yes, thank you. Thanks everyone for letting it. Yeah, no problem, no problem. How do you set up the POCs, manually or through a software? On the TS Trader, I do it manually. I also do settlement prices manually on the TS Trader platform. You can't see VIX on the TS Trader platform. I usually watch it. It's a little bit delayed, but on Market Watch. Trading edge with the change in equities times when for my charts is the close now 7:30 Central Time. Better to honor the historic regular trading hours right now. Just what I'm doing, I'm keeping the regular trading hours as the close. That's where settlement is going to be, and that's where I believe most of the volume is going to kind of drop off. Once in a while, there may be some opportunity or some information in that, but I'll take that on a case by case basis. Joseph, the future scalper. Happy trading to all, success and peace to all. Thanks, Hogue. My pleasure. Nelson Benitez, my pleasure. All right. I've yammered on long enough. Our equities are opening. Take your deep breath. Humble, grateful, and creative. Take some rest this weekend. Be ready for next week. Do something nice for yourself. We all work hard at this. Do something nice for somebody else. Say a prayer for world peace. Keep your hands clean. And we'll see you on Monday morning. No recap today. So we'll see you 8 o'clock sharp Monday morning for the market forecast. Have a great trading day. Have a wonderful weekend. Be kind. Be happy.